Welcome to the Stage Analysis Midweek video. It's Wednesday the 14th of December 2022. It's been an interesting week. We've had a few data points come out this week with the CPI and the Fed over the last few days. It's just chopped around the major market indexes and the individual stocks alike. So now that those are out of the way, we can obviously get on with normal market behaviour, see what's going on past this volatility of the last few days. So I'm going to start tonight with just a quick look at what's been going on with the S&P 500 here. So this is the 195-minute chart. So what this does is shows 2 bars per day. So it's a good intraday chart to use one step down from a daily chart, as you're obviously halving the daily chart here into a broader range. So you can see we've got a good 6-month obviously view here with this. You can see the stage 1 base that's been developing in the S&P 500. So the last few days we've been going since this third follow-through day here, and we started to go sideways. We've been consolidating within this range. So with and potentially a move now above this 410 to 420 kind of area could actually push us up and out into stage 2 even, which seemed unimaginable a while back, but we're now at a point where we could actually move potentially into stage 2 if the market improves. Could just as easily roll over here. This could be a turning point with the Fed now. We could start to head lower again, but so far, supply has been pretty minimal. So today we only made a minor lower low on the force index. Volume was strong in this last hour, but there was a bit of a demand tail on that. It did manage to hold that intraday range there. So for the most part, it remains in this short-term uptrend since this November. It was the 13th spring low on the initial spring here before we started to move out and moved into a few multiple follow-through days territory. So when I flick onto the daily chart here, you can see those follow-through days marked up. So we're now, this is the range I just highlighted here that we're in at the moment, going sideways within this. So at the moment in the S&P 500, just sitting below the 200-day moving average again, 2 days back below it. But an interesting thing to note of this is if you flip to the S&P 500 equal weight chart here, see that's been above its 200-day moving average for pretty much the last week now. 50-day moving average is still way below, but we're around 1.5% above the 200-day moving average. You can see the percent of stocks above their 200-day moving averages in the S&P 500 is also at 60.8% currently. So it's been going sideways in the range between 55 and 65% over the last several weeks now. So very much testing the top of the stage 1 kind of behavior. Consider above 60 to 65%, you're starting to move into stage 2 territory. So generally you want to see that start to get above 65 and start to hold above there to be moving into stage 2. So on the equal weighted chart here, you can see with the 2 recent pivots, we draw obviously a diagonal trend line down here as well. We've got a potential stage 2 breakout level that's formed above this 200-day moving average, which is now starting to flatten out even in there. So if we do get a strong move up through this 6,100, 6,200 kind of area here, could potentially move into stage 2 in the S&P 500 on the equal weighted basis there. So we go back to the normal S&P 500 chart here again. We've got the shorter term percentage of stocks above their 20-day EMA chart here, which has rolled over a little bit. It's a bit of a negative divergence at the moment here, coming down with obviously we had equal highs here in the price action, but we've actually obviously made a divergent lower low here on the short-term percentage of stocks above their 20-day moving average. So at the moment, this is looking a little bit more negative there in that regard, but we are still within this broader range since this second follow-through day here, which has been key. And the range has held mostly above the top half of that, which I've talked about previously. So we've generally been going sideways for a good month now and consolidating around this 200-day moving average, which, as I just showed with the equal weight, is not necessarily the case as such, as the large cap stocks are weighing this down a little. So we've got this old resistance zone in the standard S&P 500 here between this 4,100, 4,200 kind of area, so roughly. So we do start to get a strong move up and through that kind of area, then potentially we could move into stage 2 in the S&P 500. But again, this could be a double top here. We could start to roll over and we could fail at this point. If we start to get back below that 50-day moving average, then obviously all bets are off again and we could easily dip back down into stage 4. But at the moment, with the continuous improvement in the amount of stocks in stages 1 and 2, then obviously currently looking for a potential stage 2 breakout, but obviously yet to get there. So at the moment, we remain in that neutral stage 1 basing structure, and obviously looking out for any signs of a breakout move. If we look on the weekly chart here, low, we have got with the price action today and yesterday, we have got a bit of a supply tail going on here. We've got the downtrend line which pushed up into and has reversed back at that again, but you can see the SATA score in the S&P 500 E-mini futures here has actually improved to an 8 this week. So even with the squat in the weekly candle there, we've actually got obviously the moving average is starting to turn up. 10-week is still below the 30-week moving average there, but you can see we've actually got some momentum. The volume is looking a little bit more positive, but we've still got overhead resistance to deal with in this. It's still in the neutral zone for that, and we obviously still haven't made a breakout attempt. So it could improve by 2 more, and if it does, then that would be your potential stage 2 breakout. Right, the VIX is something else I just wanted to show quickly before I get into the short-term market breadth. You can see actually with today's price action, although it was a negative day for the majority of the markets, the VIX actually ended lower. So a bit of a positive divergence on today's VIX price action there, as it's reversed over the last 2 days lower. And obviously you would expect the VIX to be going higher with the negative price action back through that 200-day moving average. So it's actually come off quite a lot over the last 2 days. So that's a short-term positive at the moment. So keeping an eye on that as well. Dollar index also making a lower low this week. So we go to the daily chart on this quickly. You can see continuing to make lower lows. So from that original buying climax that I highlighted and the range through here. So buying climax, automatic reaction, secondary tests, had also a shakeout move at the bottom here, but then a lower high and broke down more convincingly. And so we've been on a daily stage 4 decline as such here, but in the weekly chart, we're now testing that over the last week or so. We've been testing the stage 4 breakdown level here on the weekly time frame. So you can see multiple levels it's broke through. Had a couple of breakdown moves here. You can see the SATA score has got down to a 2 and has been holding around to a 2. So at the moment, potentially it is in stage 4 here, but that 30-week moving average is not yet declining, as you can see by this third row here in the SATA score. So you can see just on the chart there, it's still turning up slightly. So that is still holding it back from potentially being stage 4, as one of Stan's don't rules is obviously not to buy or sell, as it would be the case would be with stage 4 decline when the 30-week moving average is still rising. So we need to see that 30-week moving average start to turn down in order for it to officially move into stage 4. But you can see the relative strength here has obviously come off significantly over the last few months. We're getting back down towards the 0 line here. If we take it out to you can see the 0 line is still rising low at the moment. Right. As I said, still looking to see how this goes in terms of how strong the bounce has been, but so far the bounces have been particularly weak. But you can see there is a little bit of a declining sort of wedging action here, so we could get a sudden sharp move back out again, which could actually then affect the stocks quite significantly if it does. So keeping an eye on that as we get into the year end, as it could be obviously an early January move where we suddenly get a sharp reversal in that and it attempts to move back up towards the declining moving averages once more. Right. Some short-term market breadth next. So NASDAQ percentage of stocks above their 20-day moving average is down to 43.82% at the moment. So hovering in the middle range at the moment. We're not oversold or overbought in either direction here. So consolidating in the mid-range. We look at the NASDAQ 100 up at 65% currently, so it's come down from the upper zone, so has managed to pull back into the mid-range and pull back up again, rebounded. So again, more in the neutral range, a little bit of a short-term negative signal on that one at the moment, towards more of a negative to neutral. NYSE again in the mid zone here, 52.54, so consolidating after getting to the overbought zone up here and then rolling over. So again, a bit more neutral. Small caps bit weaker, moving down towards the lower zone, so potentially on a negative signal there at 40.83, and the S&P 500 rolling over at the 70% level again, so it's 66.2, but did manage to come back into the mid-range here at 50% and rebound back up again, so potential to get back into the upper overbought area again, which in the short term you want to see it generally hold in that range and rebound around when you're in a strong rally mode. But when you get into the, obviously come back into that 50 range, you're on a much more neutral kind of area. So at the moment in the mid zone between the two, so still in a mildly positive, but looks it could potentially, if it continues to roll, it could turn negative there. If we look at the NASDAQ composite bullish percent and the NYSE bullish percent index using the 1 hour chart. So this, as you know, the 30 bar moving average on this is what we use for our signal line. So at the moment it's jumped back above the last couple of days. We had that move up and then it's pulled back down again, but it hasn't moved back below again. So it's chopping around in this sideways range that it's been in for a little while. You can see it's under on the NYSE here, but the NASDAQ still holding just around after popping back in, a little bit of spring type action there. So generally going sideways for the last month here. So I'll still keep this in a neutral, and this is why the market bar is still on a neutral signal at the moment, because we're tended to chop around over the last few weeks or so without much direction going on. And also you can see that in the NASDAQ and the NYSE 10-day moving average momentum index, so the shorter-term momentum index version. So you can see the NASDAQ has dropped below its zero line recently and hasn't managed to recover it, and neither has the NYSE. It did pop back above briefly, but it's pulled back lower again. So both on a slightly negative look at the moment, with obviously plenty of room to the downside, but obviously still within the sort of middle range as well. So we'd give it a neutral to negative at the moment, as we saw with the percentage of stocks above their 20-day moving average, same with the bullish percent index. So the short-term market breadth indicators given a very neutral with a slightly negative tilt at the moment. All right, let's move on to today's watch list stocks. So not too many today, with obviously the negative day in the market. So Fed obviously had a big impact on what was moving, but we did see some strong relative strength coming out from the renewable energy group, which continues to be the leading group, although the vast majority of the stocks in the group have been going sideways for a while. It's really quite weighted in FSLR, which has had a really strong run and has been consolidating as well recently. But ARRY has come up in the watch list. I think I counted back 12 times since it broke out in July. So this one has been a key focus stock as such. The more I highlight them, obviously, as they come up, obviously it generally builds in the watch list, and you can see which areas are showing up more and which are more important. So the renewables have continued to be an important group, and ARRY has been one of the leading stocks in that. So up another 8.28% today, testing the recent pivot high here, not managing to break out there, and obviously just below the 24 pivot there. So if I click into this, let's have a look at the actual figure. So exactly 24. So we get a clear break above that, then that would give it a stage 2 continuation breakout. You can see it's had a really nice stage 2 breakout back in July there. Initial run for 3 weeks before rolling over, came back into the backup entry area. So we talked about it at the time. It was highlighted a lot, and a few members were interested at that point. I remember talking about it quite a lot there, and it's had a good run since then again. So you can see here what we got. So moving off, it's also up another 50% since then. So it's been a really strong mover. You see a little bit of a V-shaped cup and handle here, so not exactly the ideal pattern there, but you can see it's actually had a good consolidation over the last few weeks, tightened up a little bit, and obviously looking to make a stage 2 continuation. So still looks like it's got some potential there, and it's above that IPO week low there. So that's an important one with IPO stocks, is once they start to trade back above that IPO week low, or the IPO week close especially, they start to get a lot more interesting. So at the moment we're obviously just getting back above that IPO week low, so we can get a clear move above 25, 26, 27 kind of area and get some strong relative volume coming in, and obviously that would be a real boon for this one. Could obviously make it for a much bigger stage 2 run. Obviously, if it fails at this point here, you get a strong reversal, then that would be hugely negative at this point, as obviously it's been looking so strong with obviously the relative strength, etc. So failed breakouts make some of the best shorting entry points. So keep an eye out for whether it fails or not. MAXN, this one also has been a strong performer in the renewable group. Rebound in the last few days, not much in the way of volume low, so a little bit suspect in that regard of the move, and a strong move today. So you can see again similar kind of pattern that we've seen in ARRY, but not as strong. Look at the weekly chart here. You can see similar kind of pattern. So stage 2 breakout, and we've got the backup entry zone through here, starting to move back up again. So again, it's had a strong move since the backup area in here. So it's again up 44%. So not as strong as ARRY, but very similar pattern. So that we're seeing in that, and again above its IPO week low and the IPO week close even. So relatively to the IPO week, it's in a better position in that regard. It's obviously been going sideways for a long time. So we've had the institutional due diligence going on, and we're starting to move through the bases down here. We're in the second base, obviously, since it started moving off of its low. Also got Sunrun, which is still in stage 1 at the moment. Did attempt to make a stage 2 breakout up at this area up here, but failed quite dramatically and came all the way back down to the bottom of the range here. So we look at this on the weekly chart. So you can see that failed initial stage 2 breakout attempt there. So had an initial move, rolled over, obviously stopped out as it came back down again, and has now reset again. So got that original base structure through here. So we start at this point, got big base structure all the way back to February there. You've got your failed breakout levels, and then we've got the new levels to watch. So potentially we could make a stage 2 breakout and move through the near term. It doesn't necessarily have to clear this area here. That's just near term resistance, and obviously older resistance as well above from the prior lows in the stage 3, early stage 4 areas. So if it does move up and make a stage 2 breakout attempt, there is still a lot of overhead, but it has built up a big cause with the amount of time it's spent going sideways over the course of the last 9 to 10 months there. So it's definitely an interesting one if it does manage to break out into stage 2, but for the moment remains in stage 1. SHLS, on the other hand, is early in stage 2, above its 200-day moving average, started to move out into stage 2 in this area here. Then obviously came back in again, undercut a little bit, but did manage to hold that 200-day moving average. It's continued on. We had the gap and island reversal back here low. So this was, I believe it did a secondary offering, which is never good. Obviously always knocks the stock down, and now we've got some kind of management change going on here. So again, not the ideal look with this one in terms of what it's doing. It's obviously in a strong group. It's obviously broke out into stage 2, same time as all the others in the group. Back in late June, late July there. Had a rebound area back into the backup zone and strong move back out again. But at the moment, obviously this one still just pushing back above that IPO week low and still below the IPO week close. So back in the turbulent zone as such. So we will see what happens with that one. But at the moment, early in stage 2, but definitely not my favourite in the group with the secondary offering and the management change going on. There's definitely stronger stocks to look at in the group